Hello everyone, welcome to the May 5th Tuesday edition of Market Opening Bell, your 10-minute guide to the stock market. Middle East tensions have eased for the time being. Reports say Iran has submitted its latest negotiation proposal to the United States and the market is hopeful for a new round of US-Iran talks. US President Trump announced the launch of the Freedom Plan operation under which the United States will assist in evacuating ships trapped in the Strait of Hormuz. Crude oil futures eased slightly during Asian trading hours. On the first trading day of May, Hong Kong stocks surged sharply. The Hang Seng Index opened 361 points higher at 26,138, extended its gains during the morning session to a high of 549 points at 26,326 and eventually closed at 26,095, up 319 points or 1.2%. The H-share index closed at 8,774, up 92 points or 1.1%. The Hang Seng Tech Index closed at 4,976, up 105 points or 2.2%. Due to the mainland May 1st holiday, Southbound Stock Connect was suspended and total market turnover reached 176.9 billion Hong Kong dollars. After the Hong Kong market closed, Middle East tensions escalated again. Iran state television reported that the Iranian Navy claimed that it had prevented U.S. warships from entering the Strait of Hormuz area, while senior U.S. officials denied that any American vessels were hit by Iranian missiles. Stimulated by the news, international oil prices surged more than 5% at one point. Technically, although the Hang Seng Index closed higher, the daily candlestick formed the Greystone Doji tombstone pattern. The index also closed just below the 100-day moving average at 26,100 points. This suggests the upward movement remains tentative and the market is likely to stay range-bound in the near term. The 26,000 level may be regained and then lost again, with immediate support seen at 25,800 points. Mainland China's property market support policies continue to be rolled out. Guangzhou's Sui 8 measures were implemented just before the May 1st holiday, introducing various favorable policies, including home swap subsidies and increased provident fund loan quotas. The new measures cover 8 major initiatives such as subsidies for residents selling old buy new, raising the maximum provident fund loan amount to 3.6 million yuan and expanding the scope of housing vouchers with the goal of promoting high-quality development in the real estate sector. According to the mainland media reports, in the first 2 days of May, average visitor traffic to new home projects in Guangzhou increased 12% year-on-year. Cumulative subscriptions rose 37% year-on-year, and the conversion rate improved steadily compared with the same period last year. The second-hand market also remained active with over 7,000 viewings and more than 280 transactions during the first 2 days of the holiday, representing increases of 37% and 11% respectively from the 2 days before the holiday. In fact, Guangzhou's second-hand housing market had already begun to stabilize and recover before the new policies landed, with online signings exceeding 10,000 units for 2 consecutive months. Data from the Guangzhou Real Estate Intermediary Association showed that in April, second-hand residential signings total 10,426 units and 1.0406 million square meters, up 4.84% and 1.47% year-on-year, respectively. Shenzhen's new property policies also took effect before the May 1st holiday. They selectively relaxed purchase restrictions in the 3 core districts of Futian, Nanshan, and Bao'an, Xin'an, while further strengthening provident fund loan support. Some agency branches reported that second-hand signing volumes have doubled, and buyers from outside the city have started to return. In fact, Shenzhen's property market was already gradually stabilizing before the new policies. In April, total first and second-hand residential signings reached 9,044 units, up 15% month-on-month. First-hand residential signings totaled 3,400 units, up 20% month-on-month, while second-hand residential signings reached 5,644 units, up 11% month-on-month. According to foreign media, the U.S. Congress recently proposed that the FDA be prohibited from accepting, reviewing, or considering specific clinical data generated by clinical trial institutions in China, Russia, Iran, and North Korea during drug approvals. The reason cited is the potential theft of intellectual property by these countries and concerns over trial ethics and human rights standards. The proposal has passed at the committee level, but the related federal spending bill still needs approval by both houses of Congress and presidential signature, so its final implementation remains uncertain. Although the chance of the bill passing in the short term is relatively low, the content has already sparked discussion and attention. Some U.S. pharmaceutical companies have begun reassessing their strategies for conducting clinical trials in China and are considering shifting parts of the trials to other countries and regions. China's clinical CRO industry is expected to face inevitable headwinds, with overall sector development confronting severe challenges. Analysts point out that if the new rules are implemented, companies would need to repeat clinical trials to complete U.S. market filings. This would significantly lengthen drug development cycles, increase R&D costs, and directly affect drug valuations. Since a drug's commercial value is highly tied to its launch timing, any delay in development progress would compress the profitability period, reduce the attractiveness of Chinese innovative drug assets, and lead to declines in both the number and scale of cross-border BD transactions. On the Hong Kong market, technology, internet, and AI-related stocks performed strongly. According to mainland media citing the latest Open Router data, global AI large model total usage last week reached 23.9 trillion tokens, up 8.6% year-on-week, marking the second consecutive weekly increase. Among the listed models, Chinese AI models' weekly usage surged to 7.942 trillion tokens, up 81.7% week-on-week, while US AI models recorded 3.258 trillion tokens, down 34.6% week-on-week. After a 2-week gap, Chinese AI models once again surpassed the US in weekly usage. Last week, the top 2 models in global usage were both Chinese. Tencent's HY3 preview ranked first with 3.03 trillion tokens, up 799% week-on-week. Kimi KT2.6 ranked second with 15% week-on-week growth. Minimax M2.7 ranked 8th, and DeepSeek V4 Flash made its debut on the list in 9th place. HSBC Holdings is expected to announce its first quarter 2026 results today. The market currently holds optimistic expectations, with focus on non-interest income growth and shareholder return policies. Consensus forecasts show underlying pre-tax profits of approximately $9.296 billion to $9.7 billion, roughly flat to slightly down year-on-year. Revenue is expected at around $18.301 billion, up about 3.7% year-on-year. Net interest income is projected at $11.299 billion, up around 6.6% year-on-year. Earnings per share is expected at $2.16 to $2.21, with ROTE remaining at a high level of around 17.8%. Management has raised its 2026 to 2028 ROTE target to 17% or above, and investors will be watching whether first quarter progress aligns with this high growth guidance. In a potentially peaking interest rate environment, growth in non-interest income from wealth management and global banking business will be key to sustaining earnings resilience. The market is also highly attentive to management's assessment of the Middle East situation and its impact on global interest rates, oil prices, and expected credit losses, as well as the asset quality of Hong Kong commercial real estate loans and whether a new round of share buybacks will be announced. For newly listed stock Star Sports Medicine, stock code 1609, which begins trading today, closed at 290 Hong Kong dollars in yesterday's grey market on the Philip Mart platform. This represents an increase of 194.4% or 191.5 Hong Kong dollars over its initial offering price. Excluding transaction fees, investors gained a paper profit of $9,575 per lot of 50 shares. U.S. stocks closed lower on Monday as Middle East tensions escalated, including reports of vessels being attacked in the Strait of Hormuz, which drove crude oil prices higher. The fear gauge VIX index rose 1.3 points or 7.7% to 18.29. The Dow Jones Industrial Average fell 557 points or 1.1% to close at 48,941. The Nasdaq Composite declined 46 points or 0.2% to 25,067. The S&P 500 dropped 29 points or 0.4% to 7,200. The Nasdaq China Golden Dragon Index, which tracks Chinese stocks, edged down 6 points or 0.09% to close at 6,881. Out of the S&P 500's 11 major sectors, 10 ended in the red, with materials and industrial suffering the heaviest losses. Only the energy sector closed higher. Big tech stocks were mixed. Meta rose 0.3%, Apple fell 1.2%, Alphabet declined 0.6%, Microsoft slipped 0.2%, Amazon gained 1.4%. Amazon announced on Monday the launch of Amazon Supply Chain Services, opening its logistics network to businesses for fleet delivery, fulfillment, and parcel transportation services. This move directly challenges FedEx and UPS. In reaction, FedEx shares plunged 9.1% and UPS shares dropped 10.5%, dragging the Dow Jones Transportation Average down 4.8% to its lowest level in nearly a month. Separately, Amazon-backed Anthropic has partnered with Blackstone and Goldman Sachs to establish an independent enterprise services company that will integrate the Claude AI platform into core business operations. Blackstone shares fell 1.7% and Goldman Sachs shares declined 2.2%. GameStop announced on Sunday that it had submitted a non-binding offer to acquire all outstanding shares of eBay at $125 per share in a deal value at $55.5 billion. The offer would be paid half in cash and half in stock. GameStop said the cash portion will be supported by corporate reserves and up to $20 billion in potential financing from TD Securities. GameStop shares fell 10.1%, while eBay shares rose more than 5%. Palantir Technologies raised its 2026 revenue guidance after the market closed on Monday, following stronger than expected first quarter results, with U.S. sales more than doubling year-on-year. Adjusted earnings per share came in at $0.33, beating estimates of $0.28. Revenue grew 85% year-on-year to $1.63 billion, exceeding the expected $1.54 billion. The stock rose 0.6% in after-hours trading. Norwegian Cruise Line reported first quarter adjusted earnings per share of $0.23, up from $0.1 a year earlier and above the expected $0.14. Revenue rose to $2.33 billion from $2.13 billion, but missed estimates of $2.36 billion. The company cited headwinds from Middle East tensions, including higher fuel costs and weaker demand trends, with consumers reassessing travel plans, especially European itineraries. It guided second quarter adjusted earnings per share at $0.38, below the expected $0.51, and lowered its full year to 26 adjusted earnings per share forecast to $1.45 to $1.79, compared with the previous guidance of $2.38, and analyst consensus is $2.1. Norwegian cruise line shares fell 8.6%. US factory new orders rose 1.5% month-on-month in March, far exceeding the expected 0.6% gain and following a revised 0.3% increase in February. Excluding transportation orders, new orders rebounded 0.8%, resulting in a 1.6% rise, above the expected 1.3% and matching February's growth pace.
Our stock pick today is InnoScience 2577. Leveraging its deep accumulation and extensive experience in the gallium nitride GaN field, InnoScience has successfully expanded GaN applications from consumer electronics into three core sectors: AI data centers, new energy vehicles, and robotic joint drives. The company has smoothly completed the industrialization process from concept to mass production, achieving a transformation from a component supplier to a foundational definer of AI computing infrastructure, future intelligent terminals, and energy architectures. In AI computing applications, as a global leader in gallium nitride, the group has successfully entered the high-voltage direct current 800V HVDC solution supply chains of multiple leading domestic and international clients, including NVIDIA. It has become a core supplier for AI infrastructure construction and high-density computing centers. The company has also formed strategic partnerships with several top 10 international power semiconductor firms, including STMicroelectronics and onsemi, to jointly develop dozens of power supply and module solutions for high-density computing centers, accelerating the upgrade of data centers toward high-density computing. With the implementation and ramp-up of high-voltage DC architectures, the industry is expected to usher in a new era of large-scale AI GaN applications. In new energy vehicle applications, gallium nitride has officially entered the fast lane of large-scale vehicle adoption. In 2025, the group's automotive-grade GaN chip shipments grew 105% year-over-year. InnoScience has achieved a triple jump in the automotive sector, progressing from mass production and shipments of OBC onboard chargers and DC-DC converters to the successful validation of main drive inverters. In December 2025, the group, together with United Automotive Electronic Systems, UAES, and Chang'an Automobile, announced that the 6.6 kilowatts OBC system based on the group's 650V high-voltage GaN has achieved mass production and vehicle integration in Chang'an models. In the same month, the group's bidirectional conduction devices completed AEC Q102 automotive-grade certification, paving the way for formal mass production in 2026. Additionally, low-voltage GaN chips for autonomous driving and LiDAR continue to grow rapidly, while applications such as automotive LED headlights, automotive-grade audio systems, and onboard DC-DC converters have begun shipping. The group has completed a comprehensive product portfolio and roadmap for the new energy vehicle track. In robotics applications, humanoid robots demand extremely high power density, ultra-fast response times, and exceptional reliability from joint actuators. GaN's high-frequency characteristics perfectly match these requirements. The group has established strategic cooperation with multiple leading domestic and international humanoid robot companies to develop 100V GaN integrated drivers for robotic joint motor drive modules. It has achieved the first mass production and shipments of GaN chips in the robotics field. Future shipment volumes are expected to grow rapidly in tandem with the exponential increase in robot shipments. In the industrial and energy storage markets, benefiting from the explosive growth of the global energy storage industry and its urgent demand for high efficiency, high power density, and high reliability solutions, the group has successfully upgraded GaN technology from consumer electronics to energy storage, creating new growth opportunities. Recommendation: suggested entry price HK$67, target price HK$75, stop loss HK$63. I do not hold the above stock.